Welcome back. I'm Ted Thomas. In this episode, we're going to discuss what happens to the mortgage in a tax lien state. I'm also going to talk a little bit about insider tips on how you can make some money in tax liens and also tax deeds. Now, later on, the latter part of the lesson, I'll also cover things that you want to avoid. So stay tuned, and I'll be right back. What happens to the mortgage in a tax lien state? Well, let me give you a few facts. There's over 3,000 counties in the United States, another 1,400 municipalities. Now, they all either sell tax lien certificates or tax deeds. Now, those are taxing entities. Now, the average buyer buys a house. They buy a house because they want to have a good future. They want to have a good retirement. And sometimes they don't get to pay for it. So we're going to talk about that. Now, all the records are kept at the local county records, called the public records. Every county has them, all 3,000 counties. Years ago, wealthy people owned all the property. When they owned all the property, what they did is they let people farm on the property. So people paid them in chickens and eggs and cattle and whatever. Well, now we don't use that system. The system we use now is called property taxes. So everyone that owns land or owns a property has to pay property taxes. Now, if you don't pay your property tax, here's what's going to happen. They're going to come out and seize the property. They're going to confiscate that property, and they're going to evict you from the land. So the government has power. The county has power to remove you from that property if you don't pay property taxes. And that's where tax liens come from and tax defaulted property. Now, the legislature is the one that gives the local county the power to do all this. So the county has the power to tax, and they have the power to collect the tax. That means they can enforce all that. So if you don't pay the tax, they can confiscate your property. Now, the legislature loves real estate because people can't leave without paying. They're always going to have the real estate. So let's discuss that a little bit. So what's going to happen to the mortgage on that real estate? You see, what most people do is they borrow about 80% of the money to buy a property. So they put 20% down. They get the rest of the money from a bank. Call that a mortgage. In the East, in the middle part of the country, they call it a contract to sale. In the western part of the country, they're going to call it a deed of trust. They're all basically a promissory note. So think about that. Everybody's got either a mortgage or a deed of trust or a contract to sale on their property. So what's going to happen to that mortgage? Well, in the event that people don't pay, the county is going to start action. They're going to say, you're in default. If you don't pay, we're going to confiscate the property. Well, if there's a mortgage on the property, what they're going to do is they're going to wipe the mortgage off the property. Now, that doesn't mean the mortgage is destroyed. The mortgage is still in place, and whoever signed that mortgage, the signatory that signed it, still has a mortgage. They still owe. But the bank no longer has the security of the real estate because the county is going to take the real estate. So when the county takes the real estate, they basically take the majority of the loans or liens, let's call them liens, or call them encumbrances, are going to be wiped off the property. So you're getting the idea. So every property starting out probably has some kind of lien or encumbrance on it. But if it goes through this process of default from the county government, the county is going to take the property and they're going to wipe the mortgage out. So could you have multiple liens on there? Could you have mortgage 1, mortgage 2, mortgage 3? Yes. But the tax lien is always the first lien. So let me say that again. Very important that you understand. The tax lien is always the first lien. So who has the power? Who has the muscle? It's the local county government has the muscle. So it wouldn't matter if it was the IRS. It wouldn't matter if it was a local bank that lent the money on a mortgage. It wouldn't matter if it was a dentist that you didn't pay and he had a lawsuit against you to pay a judgment. It wouldn't matter if it was any of those things. The county has the power to seize, that is confiscate, and wipe out all of those encumbrances on the property. So what does that mean to you? Well, that means if you're buying a property in either a tax deed situation or you're buying a tax lien, not to worry, because the county will have already wiped out those liens. They will wipe them out regarding the property. Those liens are still owed by the property. So that mortgage doesn't just disappear. So we casually say it's wiped out. We mean it's wiped clean of the slate so that when you buy a tax lien certificate, you now have a property that has basically no liens on it. Or what about the IRS? Well, the IRS is a very junior lien. So you might want to keep that in the back of your mind. It's a junior lien. What's the senior lien? It's always the tax lien certificate. Why is it the senior lien? Because it was the first one that was ever filed. Everything is done with date and time. Now, am I going to be able to get through all of that in the few minutes we have? No. Here's the important things to remember. Tax lien is always the first. Property tax lien, no matter what state, what county, where you live in the USA, the tax lien is always first. So Bank of America is going to be junior, Wells Fargo is going to be junior, IRS is going to be junior, another judgment is going to be junior. You're getting the idea. So the powerful lien is the tax lien. So if you were buying a tax lien certificate, which I'll cover in another lesson, if you were buying that, you're still getting a property without a mortgage on it because the local government can wipe that out. All right, now if you pay your taxes, you're never going to get evicted. All right, so what is the county doing? They're buying and selling a property tax number. They have no idea who you are. They don't care who you are. That tax number is attached to that property. So Americans love to do financing. They love it. They like to have liens. It doesn't bother them. Well, I'm going to tell you right now, when that auction takes place or when the county puts it in default, they're going to wipe all those off. So if you're a buyer, you're going to get a property without a mortgage. So what if you could buy that property without a mortgage for 20 cents on the dollar or 30 cents on the dollar like we teach people? All right, so the county has the power, the strength, not only to remove people, but they can remove all the liens. If the property comes to auction, it's going to come without any liens on the property. Keep in mind, the first lien is always the tax lien. People ask all the time, what am I going to do if I get a tax lien certificate? Well, folks, a tax lien certificate, I'm just struggling here to get a piece of paper. It's just a piece of paper like this. You can buy these tax liens. There's going to be thousands. There will be millions of tax lien certificates. So you're going to raise your hand at an auction. You're going to buy this, and it's going to have your name on it. It's going to have the interest rate that you're going to be guaranteed. I said guaranteed by the county. You just take that lien home, just put it on your desk because the CEO has your name on it. So if somebody steals it from your house, it wouldn't matter. So you just hold that certificate. You sit on your rusty dusty. That's right. Sit on your assets. You don't do anything. You do no work when you own a tax lien certificate and you're guaranteed a rate of return. When the people come in and pay their tax, 97% will pay their tax. When they come in and pay their tax, you have to send your tax lien back to them, and then they send you a check. Now, if you do that online, you just show up on your telephone, they'll beep you and say, we just put money in your account. How good is that? All right, so let me cover a couple of big mistakes here, okay? So when you learn this business, you're going to find out it's really lucrative, all right? So you're going to get excited. So you're talking about buying tax lien properties. Well, you're not getting a property then, but if you buy a tax deed, you're going to get a property. Now, don't buy anything you haven't looked at. So you're going to get to the auction, you're going to get all excited, you're going to have a property that you had in mind, but someone outbid you. So then you're going to start looking at the list and start to buy something you haven't looked at. You wouldn't marry the woman unless you had seen her. Don't buy a property you haven't seen. What if it's burned down? What if it's been wiped out with a flood? I don't know what could happen. The termites might have eaten the thing, but don't buy anything that you haven't seen. So that's big mistake number one. Now let me give you big mistake number two. You need to take note when I tell you this, otherwise you're going to lose your assets, and I'll guarantee you that. Well, you don't want to buy anything unless you know your exit strategy. The most important thing in this business is know your exit strategy. Is it a $100,000 property? Well, then don't bid up to $100,000. Stop your bidding at 20 or 30%. But people want to win the auction, so what do? They keep bidding, especially online bidders. They want to win. They want to win. Well, what if you buy something that isn't worth what you paid? Your money is going to be taken out of your account by the local county, and they won't give it back. I assume that you learned a lot on that lesson. If you did, I want to give you a gift, and it's a special gift, and it's a 1-hour quick start course. And what it is, in the first part of the video, you're going to learn about tax lien certificates. In the second part of the video, you're going to learn about tax deeds, which are defaulted properties. You're going to get all that in 1 hour's time. All you have to do is go below me right now and register.